Today, Reserve Bank Governor Gill Marcus has kept rates steady at 5%. Now, Marcus says the inflation forecast remains close to the upper level but within target. The government has revised down the country's 2013 GDP growth outlook. Let's take a listen.
The domestic economic growth outlook remains fragile. Following a rebound of growth to an annualized 3% in the second quarter of 2013, the third quarter outcome is expected to be significantly lower and more in line with the 0.9% recorded in the first quarter of this year. The bank's forecast for growth in 2013 has been revised down from 2% to 1.9%, while the forecast for 2014 and 2015 have been revised down to 3% and 3.4% respectively, from 3.3% and 3.6%. This is consistent with the bank's composite leading business cycle indicator, which continues to trend sideways, while the RMB-BER Business Confidence Index at 43 points was more or less unchanged in the fourth quarter, indicative of a subdued outlook. The adverse third quarter growth outcome is largely due to a quarter-on-quarter contraction of 2.1% in the manufacturing sector, in part a consequence of the protracted strikes that resulted in a 27.9% decline in the production of motor vehicles, parts and accessories in that quarter. Reflecting these developments, the Kagiso PMI declined to 50 index points in September from 55.6 points in August, but recovered somewhat to 50.7 index points in October. Industrial action and safety-related stoppages also impacted negatively on mining output. But despite negative growth in August and September, a positive quarter-to-quarter growth rate of 1.4% was recorded.
Well, joining me now to discuss the MPC decision, Busisiwe Khadebe, economist at Nedbank, Alan Chan, head of the inflation desk at RMB. Thank you both for joining us today. Busi, I'll start off with you. Talk to us about your views on the growth as kind of defined by Gill Marcus there, because we had growth, of course, being revised down for 2013, 1.9%. We're looking at in the 1% levels right now, of course, towards the upper end of that. 2014 revised down to 3%. 2015, 3.3%. I mean, it's worrying that we continue to see this trend of downgrades.
It's absolutely worrying. You saw the third quarter actually numbers, and that strike that we had in the automotive sector really weighed on growth this year. I think, as you heard from the clip earlier, the governor was saying that growth in the third quarter will be somewhere around that growth that we saw, that 0.9% quarter-to-quarter seasonal adjusted that we saw in the first quarter. So you could see there is still that struggle coming through. I mean, those figures are pretty weak. I think the MPC has a very difficult job. 1.9% they had this year, and then the 3% next year. I think it's a very, very difficult job they have there, because all of a sudden they have to balance, obviously, this weak growth with what they said earlier about inflation just averaging sort of at the top end of their upper target range. So they do have a difficult job. It is a difficult thing there. If you could just think about it, we're supposed to be growing at something like 5% to make a difference to unemployment. I think in the third quarter of this year, unemployment was something like 24.7%. To make a difference to that, you need to grow at about 5%.
And apparently, we're talking to Dennis Dykes earlier, and he was saying when she spoke about the unemployment or the employment figures we saw recently having gone up slightly, she almost seemed a little bit skeptical when she read out those numbers.
Absolutely. And she was also using sort of the narrow definition of unemployment, which gives us a 24.7%. But if you really want to look at policy and you really want to look at what's really actually going on, you can see that the unemployment rate actually in the third quarter was actually 32.8% if you use sort of the broader definition of unemployment. So it is a problem. So we use the narrow definition, but if you want to make policy decisions, you have to think about that broader number. And the other thing she just highlighted there is all those jobs that we lost sort of after the recession, we only now have actually made up those jobs. So you can see unemployment still a problem there. And yes, using the 24.7 is one thing, but you actually have to look at the bigger number, which is the 32.8 in the third quarter if you use sort of the broader definition of unemployment.
Yeah. Alan, when you listen to Gill Marcus' speech today, whilst most are saying she was slightly more hawkish than they were expecting, there were patches where you thought maybe they're even going to cut rates, because she started to talk about the weaknesses in the economy. She spent a lot of time talking about that, and then of course it was the inflation story, and then she became hawkish. So it was like that, dichotomy between the growth story and the inflation story.
No, indeed. I mean, her speech was dovish and was hawkish, certainly a little bit more hawkish than dovish. But effectively, the story about cuts in rates, we've actually seen that come through over the past week. We've actually started discussing this in the dealing room, that there is a possibility of rates being cut. However, given the statement as was today, not as much credibility given to that view at this point in time as it was, say, yesterday or the day before. We've definitely seen the short-end interest rates drop quite a bit over the past week, but effectively the long bonds are still remaining at their current levels. And actually, to be honest, from the bond perspective, over the past week has been quite boring, and the speech today pretty much as expected, so we're not expecting too much in terms of changes in the interest rate markets. However, there's talk about the cuts possibly coming through, not as much as we had before the speech.
Yeah, with an interest rate cut, I mean, we just got to dwell on this just for 30 seconds. If they had to cut rates 25 basis points, would that have a knock-on effect on inflation into next year and put the SARB's credibility at stake?
Well, look, I think from an economic perspective, I mean, we can chat about that, but I think our view is a cut in rates is probably there to be an incentive for growth. It's not really going to feed through on the inflation side. I think inflation is fairly entrenched now between the 5 and 6% range. I don't think cutting by 25 basis points will have much of an impact on inflation. I think we're more exposed via the currency and the oil price to what's going to happen on inflation. So a change in rates is more there to stimulate the economy, and until we start seeing a pickup in the economy and when the gears start turning, that we'll actually start seeing more inflationary pressure being driven by the economy itself. So from a rates perspective, I don't think there's too much one can do about inflation at this point. I mean, core inflation was pretty much exactly as expected, and the only deviance yesterday was due to food and the feed through from that into the headline CPI numbers.
Yeah. Now, the question that everyone asks always first in the question and answer session is, did you discuss a change in rates? And they said they spent less time talking about the need for a rate cut. So that seems to be off the cards for now, but more time talking about what a rate hike would mean and whether it is needed and at one point in time. I mean, what scenarios are you looking at right now, Busisiwe?
Right now, we think rates are going to be on hold for an extended period of time, so deep into next year. And then you have to start looking now. I mean, as Alan was saying earlier, core inflation was still at 5.3%, the latest figure that we've had there. So you see that there is actually not much pressure coming in through that. But even if you had to look at the inflation numbers, we had our peak, I think, in August at 6.4% in inflation, but now it's going down below this upper 6% range. And then if you look at the forecast period, inflation is going to remain below 6% for that period. So now you must think, okay, rates are low enough, they're stimulating the economy enough right now. If there had to be a cut, now we must start worrying about the rand and think if that's actually going to weaken if we had to have a cut. So the next move, you have to think about it and think, what's growth going to do? Are we going to start growing at potential in the next 18 to 24 months' time? Because if you had to actually move on rates now, the impact that you're actually going to see in the economy is in about 18 to 24 months' time.
Yeah, because there's that lag.
There's that lag. So even if they had to now say, off that 25 basis points, yes, it would be somehow to stimulate the economy somehow, but it won't really have, as Alan said, an inflation impact. So you have to now think, what is going to happen now? Is inflation, we know that's going to be pretty much under control. I think for this year, I think they said the average is going to be 5.8%, and so we carry on 5.7% next year, so that's pretty much under control. Now you have to look at the growth side of things, and as you can see, growth too is still struggling there, but we're getting higher there if you look at it. At 3%, they're getting in for next year, and if you want to look at potential growth, are we going to grow in the next 18, 24 months at that 3.5 to about 3.7%, yes, then we can start seeing, if we grow at those rates, inflation rising up a little bit there. And that's when they're going to move. So they must move 18 to about 24 months' time before that. Yeah. So our net bank view is deep into next year, we're going to have to start seeing those interest rate hikes unless something horrible happens, and then there might be a possibility of a cut.
One of the Monetary Policy Committee members reminded us that their core mandate is inflation, and it was at that point in time that you saw the hawkish nature really being underlined where the SARB stands right now when they're worried about where the rand is going forward. I mean, that, of course, is a tricky question given what's taking place with the Federal Reserve and uncertainties, and they say the extent to which this is already priced in is something that they're trying to work out. How do you see that playing into decisions right now?
Well, basically, I think our view is at the moment on the inflation side, we are pretty much within the bands, as Busi said. We are likely to remain in the bands unless we see a currency blowout. And again, as you said, the market pricing in the chances of tapering, or not rather the chances of it, but the timing of tapering, and the knock-on impact onto the financial markets, and thereby the rand, and thereby inflation, thereby policy changes in terms of where we actually see rates going forward. It's quite difficult to predict at this point in time. I think taking our lead from where the market is, though, I think we're all fairly comfortable that we're within ranges. I think the currency is trading a very narrow range. I don't think we're going to see much really happening at this point in time. And sitting at the desk, you're pretty much just seeing the can is still being kicked down the road. I think an experiment coming through at the end of May in terms of what's the market's reaction has really shown everybody what is likely to do. And I think we have seen a repricing of the market to a large extent, yes. So we don't expect too much really to happen. It is a question, though, the guys are watching where exactly or when exactly are we likely to see these changes coming through. But effectively, from our side in South Africa, we're still watching the tapering story and waiting to see what's going to happen to the currency and therefore inflation and pretty much knock-on effect which the whole globe is likely to sit through on the back of what's happening in America.
Yeah.